All right, guys, here we go. Right quickly, we're looking at the DXY, the US dollar currency index on the daily chart, meaning that each candle here that you see, this one mainly for today is just 1 day of price action, okay? And currently we are trading pretty good below it, the 200, and it's this purple line here, and basically that's just a 200 simple day moving average, meaning that over the last 200 days, the average price of the DXY US dollar currency index was where this line was tracking. And then the blue one is our 20 days. So the average 20-day closing price of the DXY. And as you can see, we had not hit or traded in or around at 200 since really back in June, actually, at the end of June of 2021. So it's been a little while. But one thing for sure is that the 20 and the 200, when they come together, they will move far and away from each other. And of course, that's just the market cycles. Then they will come back close to one another. All right. So just remember that any chart that you pull up, if the 20 is far and away from the 200, well, it's in just that cycle that price is accelerating to the upside, and sooner or later, of course, price is going to drop, weaken, and the 20 and the 200 are going to come back together. But for today, mainly we're looking at the relationship of a weaker dollar and what it has on the current day commodities like oil, gold, silver, and a couple of others. So let's get into that real quick. Well, before I do that, just, note that, we have a weaker dollar here currently, and that is helping oil. Here's some micro futures, and this really is what this video is all about, is the micro futures that we have a course on that you can take and learn how to trade the micro futures and an introduction to those commodities. And right here, we're up a little bit off this breakout candle on oil, but of course, oil's coming up, hitting the 20 and a lot of times, and this low pivot uh, on this side here where the red dash line is. So we might get a little pullback here before we can move higher. And then next, let's look at gold. This is the micro gold futures, okay? And we're holding, a few contracts here, and we were looking at this thing. Well, we got in back here on this breakout. It's a little, complicated to explain, in this short video. But anyway, got in here, came up, went short, and then we started going long again. In other words, looking for more upside as the dollar over the last, few days has, gotten weaker, so to speak. So, but right quickly, we're coming up into a high pivot area, and a pivot basically is just a 180, either from the upside you'll hit and either consolidate like we have done here on gold and pull back, or you'll hit bottom and do a 180 reverse, a pivot back up to the upside pretty quickly. Okay, that's the two different type of pivots that we have. So we're looking, where possible, and we're far and away extended above the 20, and normally price doesn't get too far from the 20. So instead of adding to your asset, whatever that may be, you're, instead of adding to the position, you may want to kind of settle out a bit and wait for price to either trade sideways or sideways to down, and allow this 20 to come up before either getting into the position or scaling out a little bit, or repositioning yourself in there. Now the next one is silver, and it's had a really good good couple of months here. Really going back to about the middle of October, how it broke out, came back in, another breakout candle, and all this. We teach on the what the micro futures course as an introduction about micro futures and how quick, easy, and fast it is to get access to trading those. And then, of course, we have like a 10 plus chapter section on actual trading any asset, whether it's the futures, metals, crypto, stocks, ETFs, whatever it is. These techniques work on everything. So, great breakout today. We're coming up into this resistance area. As you can see, all these are pivots or consolidation pivots here, going way back to January of 22. High pivot here, and then it melted down. High pivot there, melted down. Then here we go today, breaking up and over that zone. So silver doing very well. And then we're going to go and look at platinum. All of these are available in the macro futures market through your, uh, whatever trading platform you use. Most of them, like TD Ameritrade, E-Trade, of interactive brokers. There's just a number of them that allow you to do that. And the platinum futures are up. We got in, back in here on a Pacific pattern. And then here we go on copper. And it's, moving up, pretty well, along with the correlation of a weaker dollar. These are breaking out as well. So, anyway, just a real quick introduction here, show you what you can do. And commodities should be running, over the next year or so. We're in a cycle for a strong commodity move. And one of the things I do like putting up, mentioning is that as gas and oil, gas with gas pumps going up with oil, as you can see, you can hedge that by going long oil here and making, potentially, not any financial advice or anything, a lot more than you'd spend at the gas pump. So that's just an option to consider and look at. And then also silver, each contract, we can hold 1,000 ounces. We can control 1,000 ounces through the CME for about $2,400 or so. And that's, if you know the price of silver right now, it's a pretty good deal. So anyway, enough with all that. Thanks so much for watching, and we will see you on the charts.